There's more and more talk among investors about infrastructure investing. How close or different from real estate do you see this sector? How do you envision it developing over time? Or do you think it's a flash in the pan that we won't be talking about 5 or 10 years from now?
Let me answer the second part is that we'll definitely see infrastructure develop as a long-term asset. And the reason is, frankly, it is a long-term asset. So when we look at infrastructure and we compare it to real estate, we see incredible commonalities. And we believe that the real estate and the infrastructure worlds are beginning to collide in a number of interesting ways. So why are they similar? And then I'll tell you about why they're colliding. They're similar because they have long duration assets that have enduring value, right? They both generate economic rent, right? Neither real estate nor infrastructure is really in the operating business or not the selling of widget business, right? So very similar characteristics. And from a diversification of an overall kind of traditional 60-40 investment portfolio, both provide really valuable diversification. And then lastly, because of those economic rents that they generate, they're able to generate yield. So why do people like real estate? People like real estate because of the enduring value, because it's got inflation protection, because it generates yield and diversification. Infrastructure assets represent the same type of characteristics. Now, for the last 20 or 30 years, the area of investing in infrastructure has really been the dominion of the largest pension funds and sovereign wealth groups around the world. You only need to think about the Middle East sovereigns or Canada, Australia, et cetera. Those investors have basically been investing in infrastructure because of those characteristics. What we're doing in our particular strategy are finding publicly traded companies, and we've identified about 350 publicly traded companies that have those same characteristics, where they're not really running operating businesses as much as they're owning large, enduring assets that they can rent through economic rents or tolling arrangements, et cetera. I think the last thing is why are these worlds converging? So earlier this year, in 2015, we saw the first infrastructure REIT go public. And this is a company that is owning transmission lines in the state of Texas, formed as a REIT. Secondly, you can look at the master limited partnership structure, which owns pipeline and energy pipeline assets in the United States. That MLP structure is also very similar to the REIT structure. Third, if you look at tower companies and the communication companies, so there are a couple companies that are REITs that own tower companies. They're really communication infrastructure companies. So the worlds are colliding, and the last thing I would tell you is more anecdotal, but we're seeing basically the consultants and the pension fund investment professionals that we work with on a day-to-day basis. We're noticing that their business cards are changing. And their business cards used to say real estate consultant or real estate professional or analyst, and now they say real asset consultant or real asset portfolio manager. And what that means is that this space of real assets is being redefined. Real assets basically represent real estate, infrastructure, probably, and to a smaller extent, but a growing extent, timber, agriculture, and things along those lines, but income-producing real assets.